Welcome back to Higher Exchanges, the #1 independent cannabis investing show, where we break down complex cannabis markets into clear insights you can actually use. Here are your hosts, Jesse Redmond and Morgan Paxhia.
Welcome back indeed. I am Jesse Redmond, Chief Strategy and Investor Relations Officer at Leaf Brands, and I'm back again with the smartest cannabis investor I know. He is the very tan Morgan Paxhia. Morgan, what's up, man?
I'm doing well. Maybe from the smartest, I should just be the most tan cannabis investor you know. But yeah, how are you?
I'm good. I heard a funny story when we were in Chicago, where we were on with Boris, which was, a great show. And I said his parents named him Morgan Paxhia, and Hirsch was telling me, because I look at I don't look at down at the screen, I look up at the camera, so I don't always see the reaction. And apparently, like, Boris started cracking up when I said his parents named him Morgan Paxhia, which I didn't find that funny, but Hirsch said he thought it was funny too.
Oh, we got some astute listeners. They hang on to every word apparently, which is great.
Yeah. How'd you get so tan, Morgan?
Just living the life of San Diego.
Just living the life.
They call it San Diego for a reason. People get real grumpy here if it's cloudy for more than 2 days. So generally, nice weather here. So
I think it's July 27th. I'm going to head up to San Diego for my daughter's orientation at San Diego State. And then she's going to move into the dorms in late August. And my firstborn, beloved, wonderful, amazing daughter, whose name I will not say publicly because I don't want people to be creepy, will be going to San Diego State.
So cool. Are you guys going to come down by train? You going to drive?
I think probably, yeah, I was thinking probably drive. If it's on the weekend, so hopefully traffic shouldn't be too bad. Interesting. They don't allow cars for the kids at San Diego State the first 2 years because they don't have enough parking on campus. So when you mentioned the train, that made me think of it. She'll be taking the train back and forth to Santa Barbara, which isn't too bad. But yeah, one interesting feature is no cars for your first 2 years.
I think it's smart. I mean, we have Uber. It's easy to get around anyway.
Yeah. And they have some cool car rental thing on campus. I don't know what it's called. It's not like Hertz or something, but where students can rent a car if they want to run down to the beach or go downtown. So 4 of them could go in and it'd be $100 for the day or something. So it'd be $25 for each kid and kind of make it work that way, which is cool.
Yeah, that's cool. Just wanted to say hi to Brian because he said long time no see. Hi, Brian.
Where's Brian? Oh, is Brian in the comments? Yeah, Brian's a good dude. We appreciate everyone that interacts. There's my buddy 2J's over there. 2J's or JJ, whatever it is. He's another good dude. Super old. I'm surprised he can figure out his investments. The guy is 99 years old or something like that. But he's an awesome guy. He lives in Chicago, and he gave me some tips for going to Chicago, including the boat tour. So shout out to you. That was awesome. Right. Nick gave me some great tips for Chicago. Nick Gastovich, he'll be on next week. And he had some awesome tips as well. I went up there a little bit early and spent a couple of days with my girlfriend and had a great time. So thank you to everyone that gave me some ideas out there. I've always been there for business, never been there for pleasure. And Chicago was an amazing, amazing city to spend a weekend.
Yes. A great time of year to be there too.
Yeah, right. If you went there in January, you probably have a different impression. I grew up in Minneapolis, 6 hours away. So I know what the winters are like. So it's a good thing they do the conference in June. So I want to talk a ton more about Chicago. And Morgan, we have a ton to, he says, that's Mr. JJ to you, son. We have a ton to talk about, Morgan. But before we do that, why don't you tell me about some awesome dispensary software?
Sure. Yeah. So technology is changing fast with the rise of AI. We all know that. From a year from now, there will be new tools, new ways to sell, new ways to serve customers. The challenge for cannabis retailers isn't deciding what's best today, it's staying flexible enough to take advantage of what's next. That's why FlowHub is open by design. FlowHub gives retailers a complete platform to run and grow their business with the freedom to choose the tools that work best for them. Because retail is changing too, fast. To get locked into one way of doing things, if you're interested in learning more, look at a demo at flowhub.com. Thank you, FlowHub.
Nice. Yes, thank you very much for sponsoring the show. Good to say a quick hello to Annie from Flow Hub when I was out there in Chicago. So always great to see the team. And we weren't going to spend the whole day interacting with the comments, but I'll interact with one more. John asks, Jesse, are you still reading 10 pages a day? And the answer to that is yes. I've been slacking on my reading. I thought reading on social media was enough, but Micah inspired me in January to start reading 10 pages a day, and I've done that every day since. I think I'm 8 books deep and currently reading Play Nice But Win by Michael Dell, which I got the idea. Scott Grossman turned me on to that book, and it's super interesting. So if you guys are looking for a good read, Play Nice But Win is fantastic.
This is my current read.
Ooh.
It's an easy, quick read.
I think I read that a long time ago. That's not new, right?
No. This is the 30th anniversary edition, though, if you couldn't see that. So there's some new stuff in there.
And for folks that are not watching, what's the name of the book, Morgan?
The Warren Buffett Way, written by Robert G. Hagstrom. It's a quick read. It's an easy read. Of the Buffett books I've read out there, that's so you could easily blow through 10 pages a day. That's a good
when I was out at the farm with Micah and the guys over the weekend, and Micah was reading The Intelligent Investor, which made my heart warm.
Yeah. What is it? Chapter 7 and 11 are the two that Buffett suggests to focus on.
Yeah, I haven't read that one since I was in my 20s, so I don't remember. But yeah, it's a classic. Micah's a fascinating guy because he's not traditionally educated, but he reads, studies, and does everything he can to learn. And I think that's been one of those positive changes I did. The challenge in January was 10 pages a day, 30-minute workout, gallon of water, no sugar. And I think I'm forgetting something else. It was one of those January resets. Oh, no alcohol. Yeah, no alcohol. Ooh. Yeah, so I went I went no alcohol from December 8th until whenever this frickin' conference started in Chicago. And I had planned it. I'm like, I'm gonna have some alcohol. It didn't get crazy, but I had 2 or 3 drinks for like 6-7 nights in a row because I went from there to another event. Then I went to the farm, and all the guys were out there, and we're sitting around the campfire having a couple of beers. And holy shit, man! I was like, that was fun socially, but it looks like my face gained 42 pounds. I feel lethargic. I'm more anxious. I have more inflammation. So I said, I am now back on the wagon until MJ Biz. Off the wagon, on the wagon.
Hilarious that we go to cannabis events and we drink.
I know. It's weird, but Morgan, that's true. But I've also I went to a dab dinner a while ago with a local friend's brand. And if you're just getting power baked and trying to socialize, that's a different vibe too. Like, I don't know if you can smoke a little weed, but if you get too baked, I think those conversations are best kept for smaller groups rather than large scale socializing.
Yeah, I think it depends on your genetic makeup. Some people do great. I'm in your camp. I can't. I'm not extremely social when I'm really high. I get, quiet because I need to like have some introspection.
Yeah. Interestingly, to show how the world's changing, Morgan, people are trying to get away from alcohol. Both nights when I went out to dinner, somebody at dinner turned next to me and said that they ate a microdose of mushrooms before. And so that's another way to try to kind of catch a buzz, catch a vibe. And, that might work a little bit better for some folks socially. So I think people are increasingly interested in this kind of California mindset, California sober mindset and getting away from alcohol. But alcohol sucks in general. It's a poison. I hate it, but it sure is fun to socialize and have a couple of drinks. Yeah.
I love how my head feels. I hate how my body feels.
Yeah. So let's jump in, Morgan. Man, it's been a while since we did a podcast. Apologies for that, guys. Morgan had some travel. I had some travel. So we're going to shove a couple in here late in the month. Today is Wednesday, June 24th. We'll be back next Tuesday, June 30th for episode 100, which I'm pretty excited about. I don't think we're going to do anything crazy for episode 100, Morgan, but like a big theme in my life is just being consistent and showing up. Just keep showing up. And, we'll talk about it more, next episode. But I think that's kind of been the mantra of the podcast. Like, there's been some good times. There's been some bad times. There's been times when engagement's been higher. There's times when engagement has been lower. There's times, man, when each of us haven't necessarily wanted to show up, but we kept going. And here we are, episode 100. Couldn't think of a better guest than Nick. Nick is such a level-headed reset on the industry that I think it's going to be a great show. So looking forward to that.
And if people are wondering, we certainly did plan this 100 episodes ago, that our 100th episode would be on the eve of the ALJ hearings. We knew this was going to happen.
Yeah, so. Exactly. Yep. Well, let's talk a little bit about Chicago, Morgan. You were not out there. I didn't think your sister was going to be out there too, but I was on the architectural boat tour with our man 2J's recommended to me, which was a fantastic 2-hour boat tour around Chicago, checking out the big buildings. And I get a text from your sister. She says, "Hey, buddy, are you going to be at the conference?" And I said, "Yeah, are you?" And she's like, "Heck yeah, I'm on a plane out there." So it was so cool to see Emily. I had not seen her in a while.
Yeah, she was out there. Yeah, definitely. She is just makes her appearance and has a jam-packed time and keeps on going. Patrick was there too.
Yep. What's up, Patrick? So, great to see him.
Yeah. So I feel like Poseidon was there in force for sure.
Yeah, you guys were. It was a great event, man. Like I said, I was out there for the weekend with my girlfriend, spent a couple of days checking out the different neighborhoods, doing the tourist things, eating some deep dish pizza, and then rolled over to the opening cocktail hour on Sunday. And Patrick's event was kind of next door. So went over to Patrick's CEO mixer, and that was a great time. And just good to reconnect with people, Morgan. Who was I talking to? I guess we were talking to Patrick earlier. You and I were on a call with Patrick, and he was saying he thought attendance might have been down a little bit. Don't quote me on that. I couldn't really tell. It seemed packed to me, but it always kind of seems packed to me. I don't care if there's 450 people there or 550 people there. I care that the right people are in the room. And that's kind of what you and I talk about with higher exchanges sometimes, Morgan. Like sometimes an episode will do, more views than another, more listens than another. But with higher exchanges, it's like, cool that everybody's there, but we really care that we get the people that really love the space and we consider the partners in our future there. And I think that's the way that the conference felt this year. It had a better energy to it. Some of the past years have been freaking miserable, man. Like, it's been a tough slog. We don't need to go through that part of it. I think everybody understands it. And sometimes it showed up and, there's no money in the room. Everybody's looking for money. And it felt kind of like a funeral where we were just commiserating, like, oh man, this is so hard. Oh yeah, man, it's so hard. We're going to make it through, right? Yeah, we're going to make it through. And, you would, kind of move forward with things. And this year, it felt, better energy. I think the federal reform optimism is certainly helping. We're having these uplistings, which we can talk about. We got the ALJ hearings coming up. We've got Schedule 3. There's a bunch of interesting things happening. DEA licenses was really my focus. I don't know if I can't tell sometimes, like if my world is everybody's world. But for us, it was really about export partnerships, interstate partnerships. So that was a big conversation. And yeah, I just walked away like really, really pumped up. Kevin came out there, who's our CFO, and we did all the meetings together. And we were hugging it out on the way out. We were both. He was heading back home for a little bit. I was heading out to the ranch, and we were just like, "Yeah, man, this was fucking great." Like, we've been here, for the last 4 or 5 years. Some years have been, more productive than others, but this year was an absolute home run. So. Shout out to Patrick, Elliot, the whole team. They always do a fantastic job, and kind of like us, like they just show up all the time. And sometimes it's easier than others, but for those guys, it's really hard sometimes. But those dudes just keep showing up and have moved forward. And hopefully, they're starting to see some of the fruits of their labor. But big shout out to them. I always appreciate their hospitality, and I think they killed it this year.
Awesome. What do you think? It's a good point about. And I don't want to rob from later on too much, but do you think if you're assigned a probability, or how much weighting is it that some of this federal movement with medical rescheduling, potentially adult use, we're heading into that, is that the big changing factor that's getting companies more open to actionable things? And action can be anywhere from M&A to your point about partnerships. Like what has been the the thing that's finally said, like, take your head out of the sand and let's do some stuff? Is it Vireo, who's just been a relentless machine of doing transactions? Like, is it a combination of things? Like, any insight around what is kind of waking people up?
Yeah, so I've said it 100 times on the show, so I'll say it 101, which is the conversation with the small cap manager. What was it, fall of 24? And he said we're coming into potential Florida adult use, and we're hoping to get some clarity on Schedule 3 back then. And he said, Jesse, I'm interested in investing, but how can I play the game if I don't know the rules? And I think that applies to some of these other conversations with, Jesse, I'm interested in M&A. Jesse, I'm interested in just straight acquisitions with cash. But how do I play that game if I don't know what the rules are going to be? Are we going to be Schedule 3? Is it going to be just medical? Is it going to be just adult use? Is there a chance for uplisting? What does that mean to the liquidity profile of these companies? And so I think we're starting to get a little more clarity. I'd say one thing, Morgan, that was a topic of conversation a few times was UTP forgiveness. And so in some of these cases, you have firms, the big ones, with hundreds of millions on UTPs. And, if we get S3 this year, obviously, that would, 280E would not apply to 26. But what happens with 25, 24, 23, and even further back? And what happens to medical versus adult use? There seemed to be increased optimism, which I've seen shared publicly on some social channels, I think specifically on X, about potential UTP forgiveness going back. I don't want to be specific about things I heard, but if you want to say something, you can. But potential UTP forgiveness going back a few years, initially applying to medical with adult use. And so if you're one of these big MSOs with, a few $100 billion of UTP and you figure out, I don't think those firms have we know they haven't kept all that cash on the sidelines, right? Like, it's not like if you have a $500 million UTP, they're keeping $500 million in cash. No, they're kind of treating that as a, affordable loan and going out and doing other things. But if I told you didn't have to pay half of that back for certain just to make it up, or you didn't have to pay 75% of it back, it would change your attitude about money that you could invest into other things. So I think it's just getting clarity on the rule set, I would say, Morgan, but also maybe getting a little change in your pocket if we get this UTP forgiveness, which in most cases isn't actually change in your pocket, right? Like, because most people didn't pay except for GTI, but it would at least be a change in mindset. Like, I don't actually owe that money, so now I can go do some cool things with it.
It's certainly, the industry is, I've heard this so much now, it's becoming the industry truth that the assumption is UTP forgiveness. To your point, back a couple of years, it's back long enough that it is substantially the meat of the balance, the material amount of the balance that's been accrued has been accrued over that period of time. But it's not setting itself up in a UPOD kind of situation, because they're just going all the way. I have not been able to get any kind of confirmation that the IRS is going to say, and POTUS is going to say, you know what, we're good on that, call it $3 billion that the industry owes. And it's not just that, it's then also, is the federal government going to hand out more refunds to those that did pay, if there's going to be forgiveness? So that $3 billion could explode to, I don't know, 4. That the government is no longer collecting. So to the point of, like, if it's somewhere in the middle, like from a UPOD perspective, wouldn't you be like kind of hedging a little bit and saying like maybe 50% forgiveness? And then if for some unknown reason we got the full amount, then it would be a really nice surprise. But instead, I feel like there's just so much over promising potentially without having any knowable, like the IRS has not said that. So we don't know that yet. Maybe the powers that be do know that this is going to happen. But if you're the administration, would you be happy knowing that the industry's out there saying they're going to give us this big forgiveness? Like, it kind of feels like when there was some front running of rescheduling happening, it seemed to ruffle some feathers. I don't know. I'm like, obviously it'd be great. I just think there's, and maybe I'm coming from a position of just being in this industry for so long that I can't help but think, and then what, and what kind of negative potential aspects there could be. Like, I would be surprised if there was forgiveness and there weren't lawsuits around it, and that's going to put a lot more uncertainty back in the space because opposition is going to say this is a bailout for big weed, or if you did pay and then you're like, well, now I want that money back, and then all the money that I did not have to go invest like these other companies did that didn't take it. So to me, this is like got to be one of the biggest issues, not exchanges, not some of these other things. I think UTP, and I've said this for a while, I've said this to policy groups, I'm like, this is like a big matter that we need a good resolution for, that is industry wide. Like, it can't just disproportionately benefit few. I think that just puts us in a pretty tricky spot. We'll have to see. But it's interesting that was a conversation, because I have heard that too. It's a gating issue around M&A. So that would open up more M&A, obviously getting clarity on this, which we need. We need more of these transactions to happen because these balances matter.
Yeah, and there's even like more of a bull case that, this didn't come from any big MSOs, just conversations around the industry, which is that you get forgiveness going back a few years, and then you do the state house thing where you settle for pennies on the dollar for the, with the rest. Yeah, I don't know, man. Like, there's a lot of these conversations where after, being in the industry, I guess a decade, and on the investing side since 2020, you sometimes feel like a lot of pressure to know things or to have an opinion about things, especially when you put yourself out there publicly and you're sitting here on a podcast talking to people. But honestly, man, I don't know. Like, how the hell am I supposed to know what's going to happen with UTPs? Like, I can aggregate information, more informed people tell me, but I'm not out there talking to the IRS. I'm not, out there talking to the Treasury. I'm not out there talking to the White House. So like, for me to sit back here and sitting in Santa Barbara, doing a podcast with you, and we're like, oh, here's what I think is going to happen with this thing. It's just like, I feel like sometimes people just say shit they don't know anything about. I'm trying to like limit that a little bit more and just be honest about stuff and say, like, that's kind of the chatter out there. Fuck, I don't know, man. Like, that's just really how I think about it. Like, I hope this stuff happens. That would be awesome to go back a few years. That'd be awesome if it applied to medical and adult use. That would be awesome if we could settle the rest for 20 cents on the dollar. But yeah, it's completely speculative.
Yeah. Just one last question on that. What if adult use, just playing the speculative, fun podcast conversation, what if adult use does not happen?
I know.
Do you think it's a big deal? Do you think it's not a big deal? Like, what do you think?
If adult use doesn't happen?
Mm-hmm.
Oh, I think that's a big deal. Yeah. I think it has to completely restructure the industry, right?
And so, but it's a state by state level impact,
right? But how if you're a diversified multi-state operator, would that impact your business? If you're, do you bifurcate? Does every company have to spin out one portion and be left with the adult use portion and treat the medical portion in one manner and treat the adult use portion in one manner? And what happens if you treat Pennsylvania as medical, then that flips to adult use? Does that mean a transaction between two entities where you move it over to this one?
I've heard that sentiment for sure. I don't think it's a big deal.
You don't? Okay, explain.
We were born as a medical market. We added in adult use. So we just transition back. States modify their programs. Everyone that's buying, they pay a $25 medical card, and everyone is medical. I think there's a little bit of short term to get the states quickly on board, but look how quickly California just turned it on. Everyone can migrate back over, and the retailers, I'm sure, would get super savvy on you come in to buy and you get a medical card to buy, and and so there's two aspects. There's obviously the containment of the 280E exposure going backwards, but then going forwards, you just transition everyone as quickly as you can to back to medical. Some states what state went, I'm trying to think, and this is a real time, I should have thought about it beforehand. Is there any state that has gone just adult use?
Launch. I don't think there's been a state that's been a straight adult use launch.
Right.
Yeah.
So there's already a framework they can do it. I mean, obviously it would be, because like the whole point about adult use versus medical is purely a state regulatory thing. There's no distinction. You don't, like, Leaf doesn't produce different products. It's the same product. It's just how you label it.
Right. But what you're saying, Morgan, is just use California. So you've got 1,000 doors, just for an easy number. It's probably less, but let's just use 1,000. I don't know what on a percentage basis it would be of people that are purchasing cannabis, but you're dealing with, millions of people, right? So you're saying you would have to retrain those millions of people that now when you buy cannabis, you have to take on this additional burden of getting a medical card. And to them, it just seems like more friction and more hassle. And what portion of those people are going to be like, oh man, I'm good, thanks, I'm just going to go do the old thing.
I don't know. I don't think it's that big of a deal. I think you take a flow hub and you say, like, look, whoever comes in their next purchase, they just click one more button that says, I'm purchasing this as a medical card. Boom, it's already registered as a medical patient.
Okay.
You know what I mean? Like, I think technology can make this very efficient. It's just how burdensome the states want to be around it. But I mean, if they understand that they're putting businesses at risk, the better states will quickly just make it very efficient to get them over. And just like how quickly adult use consume medical exposure in states, then medical will just quickly bring that back over. And because like, if all the benefits that could come with, everyone just being under this one system and not this bifurcated system, it's probably better long term if it opens up interstate commerce, like you're been researching and we'll talk about. But you know what I mean? Like, if it just cleans the whole thing up, and then we just don't have this weird 2x2 thing where, it's treated differently and it's all just one thing. And is that the end of the world? I don't know.
Yeah, I don't think it's a death knell, but do I think it's awesome or easy? I'll think of it's more thought. Yeah, I'll think it's more thought. But yeah, it sure seems cumbersome, and like you're going the opposite way, right? When you're going adult use, you're making everybody's life theoretically easier. Like, oh, I don't need these cards. Anybody can go. Open access. Then you go back to medical, which I mean, we this is a super long conversation. I start to think about it, because what about like qualifying conditions and things like that? Like California is pretty loose, right? But you do have to write down, why you came to see the doctor, and he writes down pain or anxiety or whatever it is. And that's easier in California, where it was a medical market, but anybody could get a card pretty much for any reason. Other markets have stricter qualifying conditions. And so if you rolled back from adult use to medical, I'm going to make up a state in Maryland, and Maryland had stricter qualifying conditions, then you would pretty much crush your addressable market.
Yeah, and that's why I say it will come down to the states.
Yeah.
If they are not quickly getting on board with making a nice open program.
Oh, I see what you're saying. They could they would not have to necessarily roll back. Fuck. Yeah, then you think about states, rolling back into a different medical program with different conditions than it started with, and the legislation around, changing those laws again. Yeah, I mean, is it the end of the industry? No, but I think I would push back on it not being a big deal. I think it's fixable, but yeah, I don't think it's necessarily easy.
Right. No, but we're used to the hard in cannabis. Yeah. So put them to the task and make it happen.
Well, you want to jump into some of the heart of the agenda here, Morgan? Are you ready to go?
Yeah. So what has happened in the last, I guess it's still within this month. It's just amazing how much has happened. But, I was, I think, shocked and surprised. Trulieve is now on the NYSE, on the New York Stock Exchange,
right?
And how they were able to I think they did that very efficiently, and were able to contain. So what they did was they basically containerized their adult use business, moved it on their balance sheet, so it's an equity position, and no longer will that flow through their P&L. And the idea is it's kind of like what Canopy Growth has done with Canopy USA, where until laws allow them, they are not going to operationalize those. So it's kind of like a way that they were able to protect these assets. And for them, it was not as big of a part of their business, right? The adult use, I think, was 20-30% maybe. if that.
Yeah, I think if that, yeah.
And so then they were able to uplist, and so they, kudos to them. They made it onto the New York Stock Exchange, the first U.S. MSO. Maybe we need to call it an MMSO for a medical multi-state operator. But yeah, they got it done. Obviously the market was pretty excited going into it, and unfortunately we've experienced yet again a buy the rumor, sell the news, or however you want to call it. We've seen quite a fade since that listing. As you mentioned today, you now have options available with Trulieve. It'd be really interesting to see how this impacts the legacy ETFs in the space, where they historically were using swaps. Now they can just do direct. I'm curious if Dan will roll off swaps and just go direct, or what he'll do. We'll have to see about that. But there's been
let's pause real quick there, Morgan, because I think if you're really deep in this, and you would understand what we're talking about there. But MSOS, industry leading ETF, I'm guessing 99% of our audience catches that part. But I don't think everybody totally understands how they're getting exposure. So if you take the underlyings until recently, all of those were on the OTC, Curaleaf, Verano, Truly, GTI. They have 25 holdings or whatever the number is in MSOS, diversified portfolio, all on the CSE and the OTC. But somehow MSOS it's on the New York Stock Exchange, right? Mm-hmm. But somehow it's on the NYSE. And so you're wondering, well, how does that happen? How could the underlyings be all on lower exchanges and this one's on the higher exchange? And the reason is because they don't actually own the underlyings. They have a counterparty in between. So it's MSOS, a bank, and here's the underlyings. And the bank has effectively a total return swap where MSOS invests in the swap and they get exposure to the basket or exposure to the single stock, and the bank in the middle collects a fee. So let's say over here you get a 10% return. Over here you collect, I don't know what the fee is on swaps. It's usually LIBOR plus something. I'm just going to say 4%. I have no idea what it is. Let's say it's 4%. So you get the return of this minus the price of the swap. Then that gets sent back over to MSOS. That's not perfect, but Morgan, is that kind of the idea?
Yeah.
And so so it's cool because, right, you get a more liquid vehicle, and that's one of the reasons MSOS collects so much money is it's on a higher exchange, so it can get more investors. That's awesome. They engineered something that provides a lot of liquidity. The tricky part is that if you invest in MSOS, your exposure is counterparty exposure to the banks that own the total return swap, not the actual stocks themselves. So if you really, really dig in and do due diligence on MSOS, you better be comfortable with whoever the counterparty is, because that's who you're investing in. So if that's JP Morgan, which I don't think it is, but if that's JP Morgan, it has a credit rating, and you're saying, okay, cool, I'm confident that I'll get the value of that swap because, dealing with a credible counterparty over here. If it's First Bank of Kentucky that has a terrible credit rating, then you'd be a little bit more nervous about getting the value of that swap back. So that's kind of how MSOS, the engineering of it works. The point that you're making, Morgan, is now with Trulieve, they can actually own the stock because it's NYSE to NYSE, and they don't have the counterparty risk or the expense of the swap.
Yeah, I think all that counterparty discussion is it sounds like you lived through the great financial crisis.
I ran a hedge fund where we ran a leveraged portfolio. So we had like 200 million in holdings, and we had a 2x share class. And so for every dollar, we had an additional dollar of leverage, and we had total return swaps with a couple of the big banks out there. So help structure those. So yeah, I lived in that world in my former life.
Yeah. Because I don't think most of the shareholders today, if they even lived through that, if they even experienced what it actually means, that there's potential for a counterparty to go out of business.
Yeah. So, which is rare, but right. It's rare, but every certain amount of years that shows up. But
yeah, you're going to get the okay boomer.
Yeah, until it happens.
Right. But yeah, so it's a good point though, is they could remove that, at least that little bit of risk. I mean, Trulieve is 20-something% of the fund anyway. So, just to your point about removing that credit risk, they could pivot that and reduce costs. I don't know what their costs are either. That's not public. So, however that means, but they could certainly do that. And, but anyway, so, it was interesting because I've been talking to brokers and things like that subsequent to the listing, and I was, how's it going? What's it been like? And one of the challenges has been like it went out at whatever price per share. I don't remember exactly, but it's down some like 25% or so since it's listed. And and people are, and so I've just been like, what's the demand like? Are we seeing demand yet? And unfortunately, it's been kind of muted, which makes sense that unfortunately without the demand side, you've got more liquidity being on an exchange, but where is the interest? Where is the demand? Like this, I know so many people were telling us, you and I were not bullish enough about exchange access. And, and we were both kind of saying, well, I think there's more than just like, this is huge. I'm not trying to downplay getting access to an exchange. We're here on higher exchanges. But that's a piece of the process. It's not this like one shot fix all, you get the exchange and everything's great. It's like, we still got to kind of get back in and like, how do we get the momentum going? And, where is their investor interest? Talking with investor groups out there about how they're looking at the sector, where is their money flowing interest? Some of it is around like more saying like, oh, there's distressed opportunities and we want to kind of go after that. And it's like, well, that's kind of like the Vireo strategy, kind of going after, and no offense to C21 and don't mean any offense to you guys, but just saying like, that's kind of the perception of how they're going about consolidating, making transactions, going after distressed opportunities. So, just trying to pay attention to where the money is flowing. And so like, if you have a company that's in more decent shape, is that garnering interest? And so far, not yet. And I, I've got my kind of theory, but just wanted to pause there if you had any thoughts or comments on that.
No, this wasn't my expectation that the stock would go down, but it was very much my expectation that timing matters. And when you're entering a more liquid situation, auditioning for a larger investor group, you want to look as pretty as possible, right? If you're looking to get a date for the dance, you want to, go out polished up and, be the best dance partner that you can be. And we have these conversations at Leaf. We're interested in being on a higher exchange someday. We have a little bit of work to do in terms of, meeting those qualifications, but we also want to enter that through a position of strength. Like we've been, turning the company around is too strong, but with like, adding the farm, we've taken a business that did 22% margins up to pushing 50% margins. And we're really proud of the work that we've done, but man, there's so much more work to do. And when we, enter, that higher exchange, whether it's NASDAQ or New York Stock Exchange, we want to be buttoned up, polished up and ready to go. And if there's momentum in the sector, all the better. I think TrueLeaf has their act together. They have a fantastic Florida business. They've got some other things waiting for adult use, but it's been one of the more solid companies out there. So I don't think that's the problem, that TrueLeaf is in and of itself not attractive. But there's no momentum in the sector, Morgan. Nobody cares. Nobody cares about cannabis, and it's a slow build back. Like I've said this a number of times, but I don't think we're going to have that V-shaped recovery that we were once hoping for. It's just been too much damage for too long, and sentiment's gotten too negative, and it's going to take a while for folks to come back. I do think it does come back, but I think all of this just takes more time. It takes more time. It takes more time. Like over and over, it takes more time. So now we put a pretty good company out there for anyone to buy, and instead it's an opportunity for more people to cash in and sell in the near term. But Morgan, I don't think TrueLeaf did this to see what happened in the first couple weeks or whatever it's been. It's a longer term play, bigger investors, index inclusion, more liquidity, like every reason in the world, big funds investing in you, right? Like the mutual funds, like they may be just starting their work on these sort of companies now. The longer this has dragged on, the more catalysts that have failed, the more the big allocators are saying, cool, I'll take a look at that, but tell me for sure when it's done this time, because I ain't spending, a bunch of time on something that's for something that's not to come to fruition. I did that 3 times. I'm not doing it anymore. So call me when it's done. And when it's done, maybe that means medical schedule 3 and uplisting. I don't think so. Maybe it means, adult use and clarity that, more of these stocks are going to be going to to these higher exchanges. So I think it's just going to be a slower build. I mean, if you're a Trulieve shareholder and you thought you're going to get, a 20 or 30% pop, and instead it's down 27%, MSOS is down 16% during the period. So it's been a negative tape, and they fared, 11% worse, down 27 versus down 16 for MSOS. So disappointing for sure. If you're a Trulieve shareholder, especially if you bought it thinking this was a catalyst, welcome to the cannabis sector. Stuff doesn't work out when you try and do that sort of stuff. But I don't think, Morgan, that it necessarily means that long term it's not a good move. And one comment I got from someone I respect very much on the MSO leadership side, it didn't clear his name for this, so I'll leave him personally out of it. But he thought it would have been stronger if a basket of these companies went out, if 3 or 4. So if you had, Curaleaf, Verano, GTI, Trulieve, pick your favorite 4 out of the top 6 or so. If those all uplisted together, then if you're a portfolio manager at Franklin Templeton and the growth fund, typically when you enter a sector, this is how we did it when I was at Fisher Investments, is you would try to buy a basket to get representation of that sector, remove some of the single stock list. So let's say you put 5% in cannabis, you get 5 names, you do 1% each, or maybe you put 2% in your biggest name and a little bit less in the other ones. But real common in larger allocators is I want to own a basket. I just can't stick 3% just in Trulieve. Can't make that kind of a bet. And so he thought it would have been helpful for them to all go out together. And maybe once there's 3, 4, 5 of these out there, then that's the better case for the Franklin Templeton Small Cap Fund. Just totally making that up because I worked at Franklin Templeton. Not saying they're looking at the sector, in case anybody's listening. But if you're at Franklin Templeton, you could go buy 4 names, or if you signed an analyst to it, if you're saying, oh, we want to have Jim go look at the cannabis sector, but there's only Trulieve in it, that's a different ask than, hey, there's 4 names over there to go check out. Go find the best 2. Do you see where I'm going with all that, Morgan?
I do.
Yeah,
I do. I think it's an interesting point. I also haven't thought about a mutual fund in a very long time, so it's interesting to hear about mutual funds. Because I just think about, obviously, ETFs are they've eaten the world. Question on the sentiment, though, because it's a good point, is like sentiment. Do you, and Brian, thank you for pointing this out because this is important, is like, so Trulieve announced a stock buyback up to 50 million. So they're a bit there. But then you also have Kim, CEO, and she filed this months ago, but didn't change it, is selling stock right into the listing.
Yep.
That's been happening. Is that a factor? Do you think it's an impact, or is it just more the sector just feeling frustrated and just, because the stock is going down and she's selling, that it's just making people more frustrated? It's just like more of a hit on sentiment than it really is an impact on the stock.
Haven't done the math on the stock in terms of what that impact would be from a volume perspective, so I can't speak about that from an educated manner. But people like, Morgan, insider buying. Like back in my quant days, that was a factor that was a powerful predictor of future returns, was insider buying. People, if insiders like what's going on at the company and they're buying stock, generally speaking, there's exceptions, especially on the selling side too. Sometimes people sell stock for a whole bunch of reasons. Could be taxes, could be a whole bunch of different things. So selling, I think, can be a little bit different in terms of a sentiment indicator, but buying was really a predictive indicator. Not sure if it still is. It might have gotten arbitraged out, but insider buying used to be a popular borrow factor and fundamental equity portfolios. So I think in reality, it's shown that buying is predictive of future returns, but also just logically, Kevin, who's our CFO, he just personally bought another 100K in stock. Not a ridiculous number, but to dudes like us, doubling down to 100K in your own company when you already take a good slug of your comp in the equity and you're already all in every day on a business, tells people, I'm freaking pumped up, man, and I want more of this stock. I'm doubling down on what I'm, not doubling down literally, but I'm doubling down on what I'm doing here. I'm fired up. Let's go. The other side is, Kim owns a tremendous amount of stock. I don't know what the value is. I don't know what percent of her holdings this is. But if you go public and the first thing leadership does is sell the stock, yeah, man. I mean, that's her right to do it. And I'm sure she still owns a ton. She's CEO. She's all in her own way. I'm not doubting Kim's commitment to Trulieve. But if you're just a retail or even a professional investor looking at this, you're saying, the first thing the CEO does when they uplist is start dumping shares. I just don't think that's it's just not a good look.
Yeah, and I would say, the point on insider buying, especially CFO, because they're seeing the financials. So if they're happy with where the financials are going, I mean, I think that's a very good sign to see. And to your point, yeah, selling can happen for a whole host of reasons. Usually, a buying is a very specific reason. But I was going to ask, is insider buying as big of a deal as Nancy Pelosi buying?
Right. That would be the ultimate signal. Yeah.
So, well, yeah, I mean, just to wrap this section, and we'll jump on. But, for me, I guess, how I kind of rank these order of importance is where I see the industry today, especially these large companies, is, first and foremost is balance sheet and how this 280E is going to be clarified. I think that is it has so many impacts on what happens next because of their balance sheet, How clean is it? Like, what are they going to do? How much overhang do they have from this tax situation? Will it get clarified? Because my next thing of importance is growth. And I think that is a big deal. We've talked about it ad nauseum here is, most of the sector is not seeing growth, very low single digits to sometimes negative year over year. So getting growth back into the space, and I balance sheet ties right into that because if they're constrained on their balance sheet, it's hard for them to grow. The famous saying of you can't cut your way to growth. Kind of where we are. Profitability. A couple of years ago, I was all about profitability because I didn't know when things would get better. So it was just like you had to be profitable to stay alive and make it through. But I think we're shifting a bit now where growth is very important. And a lot of these companies have established operating infrastructure where they've been facing reverse operating leverage. So when you get some growth back, that can generate profitability itself. And the last thing is exchanges. I think actually exchanges are if I'm rank ordering it, I actually think exchanges are the least important of those because if you've got a good balance sheet, you've got clarity, you're doing transactions, if you're showing strong growth, then you go in and exchange and you're, on that trajectory. And it's kind of like what you were saying with Leaf is like, you guys got so much you're doing, like where would an exchange land in your priority stack? Because there's all these other things you're trying to do.
Mm-hmm. Yeah, I like the way you said that. And just to focus on one part of it, which I think you're awesome about, is the balance sheet is table stakes. Because you look at the balance sheet, you say like, is this a business that can move forward, or is this cap table so upside down? And sometimes it's just how much debt do you have, but sometimes it's like the order of the debt, the covenants, when is the debt due? What are the triggers? We've seen those disasters, right? Now we've seen Air, we've seen the cannabis, we've seen Forefront. I'm sure I'm missing Gold Flora, and I'm sure I'm missing a few others in there. But yeah, I'd like that, Morgan. Balance sheets are the table stakes. And if you pass that test, then let me look into your growth and profitability and all that other stuff. But sometimes people start on the other side. They get intoxicated with growth. Then they get to the balance sheet. And at that point in your head, you've already justified the investment. You're like, well, I've got some 22% debt that's coming due next year, but it's growing at 20%. So I think I like this. And I like where you're coming from, which is like start with the balance sheet and then decide if you get to go on to those other factors.
Well, but while we sit here too, talking about all this stuff, I mean, there's some really interesting things that are going on. And today's title of the show was The Next Chapter in Cannabis. So where are we going?
Yeah. So I think these DEA applications are a massive deal. And I'll preface this conversation to say that I'm tainted in that, I'm in California. I'm surrounded by Leaf, of course, where I work. We're close with the Glass House folks. They're the MSA Interstore in Palm Desert, friends with all those guys. They're down the road. And I live in a California-centric environment. So I may be distorted. And if you're at a different state or at a different company that this doesn't impact you, I'm going to say in advance, like my enthusiasm is probably from the lens through which I'm looking at the situation. But I'm pumped up, man. I think this is a big deal. I think maybe it's the biggest deal to scaled California operators, lower cost producers. But if you're a higher level brand in California, like the Alien Labs of the world, maybe, it's a big deal to those folks too. So I don't want to confine it just to the lower cost producers, but I think it's for the scaled West Coast, I think, and from my lens, California operators, I think this is a really big deal. And it's a big deal in a couple of ways. Like there's two paths here. So this DEA registration for medical allows you to potentially export internationally. So think about markets like Australia, EU, UK, there's a host of, Brazil, like I don't want to name them all off, but there's a number of global opportunities where we might be able to export cannabis, very similar to what's happening in Canada, but instead of being Canadian products, they would be California products, which I think have a little bit more cachet in the cannabis industry. And then there's the second piece, which is the interstate piece. Could you move license to license? So could, you were saying Trulieve before, this is not happening or being discussed, but just for an example, could Leaf send products to Florida and those could go in Trulieve jars? Probably the worst example I could have used because Florida is mandatory vertical and might be one of the topper states to move, but you guys get the idea. There's 24 adult use markets out there, a bunch, 16 more medical markets. Is there potential, as we work through these registrations of initially medical, eventually adult use, to use this DEA pathway to, open interstate commerce? I think export is the first thing that happens, which is initially a bit counterintuitive, like, why couldn't you move things in the US sooner? But I think export probably happens more quickly, where you could begin, shipping these products to some of these different countries that I mentioned, assuming you have the right certifications to do so. And we can unpack that a little bit if you want to, Morgan. And then I think the longer term path is on the interstate side, where there was news earlier where Vermont is interested in interstate commerce. Nevada seems more conversational about it. So there are some states that might be interested in that more quickly. Then there's some other states, which I think will take more time. And one of the things on my to-do list is Micah told me this great book about alcohol coming off prohibition. I forget the name of it now, but it's a whole book explaining how alcohol came off prohibition and what that path looked like. And I'd like to study that to see, it wasn't like every state all of a sudden started serving alcohol again. It came back on a state-by-state basis. And I think that's the way this happens here. So I'm going to pause in a second, but I think big picture, the opportunity is if you can do these DEA, license transfers in the U.S. with across state lines. It could be with a brand. It could be that Leaf is in California. Going to make up a name here. Kiva is in Illinois, and you can move your California products to Kiva in Illinois. That would be great. There could be bigger partnerships. Could Leaf serve as the concentrate provider for a larger MSO, and that larger MSO decides not to be the concentrate business? So I think there's a tremendous opportunity, on both sides, both on the international and on the interstate for certain companies. So I'm going to stop there, Morgan. I have a whole bunch more to say, but I'm going to stop for a moment because Hirsch Jane told me once in a while, you need to pause for a moment.
Well, we talked a little bit about this with Hirsch about, some of this export potential, and what would be some of the initial markets to target and how much, it could be obviously huge for a company like Leaf. It's pretty huge for any one company in the US to have access to do that. Even if those markets are not large in their own right, but singularly specific to a company could be very significant. If you guys were able to export, let's just for fun's sake, $50 million worth of product, that's massively material for Leaf. Is that massive on a global stage? When you think about the total market size, no, but it's massive for an individual company. And I think that's what's the important part of that, is not to get lost in the headline numbers, but the company specific. And there is Scott Grossman is pretty good about this, about do the work, understand what you own. And I think in that kind of situation, it is important to understand if there are some of these pretty outsized levers, who is it going to impact, with this changing landscape, and really who's at the front edge to experience that change. And to your point is, naturally you're looking at what are the advantages, what's the proposition to have that advantage. And, California does, and a company like Leaf does have that differentiated situation where your cost structure, your cleanliness, it's just vastly different than the rest of the country. So you have that ability to potentially have an outsized benefit. When you look at some of these others, they're actually thinking about the reverse situation where they're like, oh my gosh, if we're able to start contracting a company like Leaf when interstate does start to happen, what am I doing with all this sunk capital in these facilities and all of these employees and all this stuff? Is like, it's kind of like, it gives me a little bit of a rhyme to like the textile industry. And like what happened there is like, there's a little bit of a rhyme there, where just cost, made all those facilities in the Northeast, out of business.
Mm-hmm.
And so this is a little bit of a look in the future right here. It's like how the deck chairs get shuffled.
Yeah, and for a while, Morgan, I had it in my head this was a big win for the glass houses, the Leafs, and some of the other California businesses, but a detriment potentially to the MSO model. And I'm not quite sure I see it that way anymore, but I want to unpack it a little bit with you because, if you have cultivation facilities that are 40,000 square feet in 9 different states, you'd rather have, a couple 100,000 square foot facilities or 200,000 square foot facilities that feed all of those states. You don't want to have inefficient little grows trying to replicate genetics and SOPs across like 9 or 10 different states. That's a massive, massive headache. And then you add extraction to that, Morgan. Now, not only do you have to grow the stuff, but now you got to set up an extraction lab. And that extraction lab at Leaf, we have 3 extraction lines. We have ethanol for distillate. You got to have that. Hydrocarbon for things like live resin, liquid live resin for vapes, sugar, batter, shatter, all that stuff from the hydrocarbon line. That's a big piece of business. You got to have that. And then solventless is the smallest, but maybe the fastest growing, that making things like rosin. Leaf has that, of course. And we turn our field and the material we source into anywhere from 75, sometimes as many a different 100 different we call fractions, which are types of concentrates on our menu. So one fraction would be like Gorilla Glue liquid live resin. Another fraction would be OG Kush shatter. So we'll have 100 or so, sometimes 50, 75, depending on what the portfolio looks like, of these things on our menu. Now, if you're an MSO trying to replicate anything like that, that just sounds like a massive headache. Like we're maybe one of, if not the best at it in California, one of the best in the world, man. And if you sat down on their ops calls, you'd be like, wow, this is not easy. Like it's a really fussy thing. So I say that in the context of if you're a larger MSO with a great retail footprint, maybe you're more interested in being in the distribution and the retail business than you are. Certainly, I haven't talked to a larger operator that says, hell yeah, I love the extraction business. Usually they say that's kind of a pain in the ass. And even on the cultivation side, like maybe they want to keep a couple of their flagship cultivation facilities, but I think there's a lot of efficiencies to unlock by consolidating those. Like, what is it? TerraSend has a great Pennsylvania facility, but maybe Maryland's much smaller, and they could find some efficiencies there. And so I think there are some unlocks. I think it's clumsy because it's like, what do you do with these things, especially when they have 20-year leases? Like, does that become a pickleball court or a movie theater, or do you grow vegetables in it? I don't think there's a big, indoor vegetable market, but maybe someone could, unlock that niche. But so there's a problem with it in terms of the legacy part of it. Like, how do you unwind it? But there's a lot of efficiencies that come from it too. And again, I initially thought of it just from a greedy, Leaf or Glasshouse or Alien or whoever example you want to use perspective, that we can sell more stuff, Morgan, but more stuff at higher prices. And they're like, hell yeah, that's a huge win. But let me walk through an example. And I think this is going to be hard to stick with, but I put together just kind of an example of how this unlocks value on both sides. So I'll read through it, and then Morgan, let's unpack it a little bit. So Leaf generates about 40 million of revenue, and last quarter we were at 49% gross margins. So let's call it 50 million gross margin just for this example. Unnamed MSO, just an example, generates $1 billion of revenue at 50% gross margins. 10% of the MSO's revenue, which is 100 million, comes from concentrate. Leaf produces distillate. This is hypothetical. We're a bit cheaper than this for 50 cents a gram, and we sell it for $1. I just use easy numbers because that's a clean, 50% gross margin on that. And the MSO currently pays $5 for distillate in their current markets. So now let's assume that the MSO purchased 20 million of distillate for Leaf at $2.50. So what did there, Morgan, was I met in the middle. I said, we're at $1, you're at $5. Boom, let's meet at $2.50. Here's what happens. Leaf revenue goes from 40 million to 60 million, 50% increase. Gross profit goes from 20 to 35 million. Can't read my number there. 60% increase. And gross margins, Morgan, for our business would go from 50% to 60%. So big pickup on gross margins. That part makes total sense, but the MSO wins too. Let's say revenue remains the same at $1 billion. Their gross profit goes up 20 million and their margins go from 50% to 52%. And so what you've done is have an unlock on both sides. Leaf sells something at $2.50. We used to sell it for $1. Hell yeah. Plus we just took in 20 billion in new revenue. Hell yeah. The MSO gets rid of all this stuff that they don't want to be doing in the first place, which will be a little bit messy in terms of, winding down those facilities, but they're all of a sudden just ordering off one menu and getting it shipped to their door. And in the meantime, for making their lives easier, they increased their gross profit from 20 million to 36 million and bumped up from 500 million to 520 million. They picked up 20 million in gross profit and they bumped up their gross margin by 2%. And these are super small numbers, double or triple the numbers to make it more impactful. But you can see on both sides how this can unlock, a win-win in the interstate model.
Yeah. So obviously in that is the carrying cost if they have to have a foul load facility, right? So it wouldn't show up in gross margin, to your point. But get the simple math of it for sure. And to your point, as those numbers get bigger, the benefit, it's almost like they would want to benefit so much that they can overcome that carrying cost as they have to unwind certain things.
So if you're a $1 billion MSO, like you're probably, I don't know what the exact numbers are, but you're selling, they're generally about 35% or so products that use concentrates, but then you got to back out the cost of the vape hardware, cost of the chocolate or gummies and the edibles and all that sort of stuff. So the actual oil is like, 10%, let's say 15%, depending on who you are. So if you're a $1 billion MSO, it's $100 or $150 million in revenue. And so if you swapped it all out, the numbers for them start to be a little bit more impactful. I didn't do that here because the Leaf example gets stupid if we take on 100 billion in new revenue. Like I'm happy to do that, but I just didn't want to make this sound like super sensational, but plug it in for the flower side, right? Like if, there's been chatter about Glasshouse and MSOs having conversations. It makes total sense. If Leaf's having conversations with MSOs, of course Glasshouse is, and if they could plug in that supply chain of California sun grown at this cost versus producing it for $600 and they could buy it for $300 or $400. Again, just making up numbers here, but you get the idea. But I do agree, Morgan, it's not just as easy as that. You have to figure out what are the other consequences of that. But what I saw in Chicago from conversations over those next over that 2-day period was like, this is opening up. We don't know when, we don't know exactly how, we kind of know how, we don't know exactly when, but this is the kind of unlock that's available, and this is the evolution in the industry that I think a lot of us have been waiting for. Like the state siloed model is so ridiculously painful. I don't think people realize how hard it is, man. Like to run 12 siloed businesses with different retail rules, different cultivation rules, different extraction rules. It's just wildly efficient. And to your point, it's a good one, Morgan, which is it's a bit painful to wind down. It'll happen over time too, right, guys? Like a state comes on. Oh, yeah. Then another state comes on, then another state comes on. So like this sort of unlock I'm talking about will take years to happen, but it does show long-term what the efficiencies can be. And I think it's going to be a big unlock from these businesses where they don't have to reproduce every single freaking thing in every single state.
I think important part of what as you're describing this is focus, where you guys are you have a very specific, focus and value proposition. These MSOs have had to build these mega complex, capital inefficient, state by state businesses. Some of these production facilities, how much of it is their extraction lab. So it's a really good point, is that there might not be that much of an impact early on if they're just talking about that one aspect, because then if they say, look, we're going to use these, to your point, these like specific facilities to only focus on producing the high quality flower that we want for our branded product on our shelf. And then we're going to have partners that can help us, fill in our supply chain in a very, focused way, where we have the trust and understanding of how this is going to function. That could actually be super interesting, where, it might not be as like this kind of idea where it's going to be so capital destructive right away. To your point, it's going to be like a burn off, where, it's kind of like craft beer in a way, where it's like, sure, you have these mega facilities in the middle of the country, but then you have tons of craft brews all, located all in like their regional areas. You could think about that with their specific strains they want to grow in those markets. So, and that would be a really nice path where they still have a nice, robust offering. They're more focused on their retail distribution and maybe some high quality, specific brands that they want to maintain, but they can still do that and do it in a more capital efficient way, and not having to break ground on a 500,000 square foot facility in the Northeast where power, water, and, labor and everything is just brutal. So I think that's good to see. And, we've been hesitant on capacity in a lot of markets because there's been too much, and we've just always questioned the ROI on it. But we've thought, retail had staying power, and, whether we're calling a medical retail or just retail, that does seem to be something that will come out of this. And some of this, upstream is going to change a bit. But long-term, it's much better, instead of trying to do this in every single state. It's just, but to your point is like, what is that arc? What's that timeline looking like? I mean, we don't have any kind of visibility yet, right? It's more just, laying the foundation for it.
Yeah, I think that's fair. I think that, there's conversations, going on about interstate pacts. There was the Vermont news. There's other, more behind the scenes, less public conversations about the way, states could work together. But yeah, I think it's going to take time, and maybe it's one of those things where once you ink the first state, the second one's easier than the third state, and maybe new states are easier. Morgan, like let's say there's a medical market rolling out, and they just say off the bat, I'm going to allow interstate commerce because they haven't built the infrastructure, so it's not as painful, right? I think the trade-off, like on the for the people in those states, is if you're a consumer, you would want an open architecture because you could bring in all this fire stuff. Like if you got, I'm a big rosin fan, and like Leaf is a scaled cultivator. We grow for $8 a pound. All of that's turned into concentrates, but we don't just make cheap concentrates because we produce lower cost flour. Like we grow some really fire stuff at the farm, freeze it, turn it into live resin and rosin. And some of the rosin that we make, rivals, the best stuff in the legal market and the best stuff even in the California traditional market. So I say that in the context of if you were in, Massachusetts, and all of a sudden you could get, super fire, leaf concentrates over there. For the consumer, that's a big win. Same thing on the flower side. If they could get actual glasshouse or actual Alien Labs, or pick whatever flower you like, that's from California, not just that Alien as a partnership and a local grow and all that sort of stuff, but the real deal to the consumer. Hell yeah. And I think what you're saying, Morgan, is totally right. Like you should be able to get, just like you have, your Coors Lights, your specialty brewers, and I could see, the scaled stuff, comes maybe from the West Coast. I think they absolutely keep some of the local indoor grows. Some of those could do some collabs and make some, great concentrates out of there. So I don't think that needs to go away at all. I just think it's about unlocking efficiencies and allowing everybody to do what they do best. And when I left Chicago, I left there strongly with the impression that the strength and interest of most of the larger MSOs is on that retail footprint. Brands, I should have said this earlier, brands, Morgan, huge deal. Distribution, huge deal. So could they buy bulk flour, bulk concentrates from California and throw them in their own brands, right? There's a million different things that are exciting on that side, but I think the consumer picture is huge win at the counter. If you're a Massachusetts consumer and you get, 25% of the store is California products. That sounds pretty interesting. The flip side is you make the other case, which is what is this going to cost in terms of layoffs and that facility being shut down and all of that sort of stuff. So it's kind of it's a multivariate equation that'll be interesting to see how different markets reconcile it. But I'm curious, maybe, and then we can wrap because we're chasing the clock as usual. But at least wrap on this section is maybe new states completely rolling out for the first time. Maybe that's the easiest way to plug in medical to medical DEA when they haven't even built the infrastructure yet.
Yeah. Well, yeah, because then they can write the regs right away. So they don't have to go to their legislator and hammer through and blah, 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 blah. Like just do it. And then they know how the capital will be deployed will be productive and not have this potential build and then what could happen after that. Yeah, I think it's it's a great time for you guys. I think it's it's going to behoove a first mover, like in this situation, a first mover. How the saying is, like, first one through the wall gets bloodiest. I think the first through the wall here, though, could stand to benefit significantly for a large scale operator on the East Coast if there was a way to start bringing it in, and all of a sudden your cost structure improves by that much just by the simple math you're talking about. If it was $5 and you're taking down to $2.50, like, they're going to have so much power in the market, plumbing that through and selling that through in retail. It wouldn't have to necessarily go all the way down, but they could undercut all their comp by 20-30% and have the same margin profile. They're gonna do fantastic.
Yeah. And there's a bunch more we could unpack down the road in terms of, like, the export side is non-trivial. I think that's first, but it's non-trivial to get the certifications to do that. So, folks out there scrambling for whatever GMP is appropriate, or GACP or whatever you need at your place to get those things done. So, there's a lot of work to be done, but I think it's a big unlock for. Maybe initially on the export side, that is the biggest unlock for some of the scaled California operators. But I think longer term, there's a lot of value creation across the industry as we each get to do what we do best. Is kind of the way that I tend to think of it.
Yeah.
So why don't you take us in?
The way we know this industry is not the way it's going to be.
No. And we've just got this, it's one of those things, like a lot of stuff, Morgan, like the state-led growth story, the political catalyst, like we know the destination is over here, but we don't know how long and exactly what that path looks like. Same thing for this DEA conversation. Like, we know interstate and global is going to eventually end up over here, but how do we exactly get there? And just one more indication that we're early in the formation of what this thing's ultimately going to look like.
Yeah.
You want to talk a little bit about Georgia and Virginia, and then we'll get out of here?
Yeah. So just quick on Virginia. So the Virginia lawmakers did end up passing or voted on their adult use. So after it was rejected by Spanberger, and they actually were able to get back to the table and hash something out that passed, that went to Spanberger's desk for signing. She hasn't signed it yet. There's apparently some more things that they're messing around with in there. They claim it's just cleanup, because they were moving quickly to get this back in. The consequences, the start date has been moved out, so maybe that gives a little bit more time for this cleanup stuff. But they were targeting Jan 1. Now it's next July, so a little more than a year from now. They also gave in to the excise tax that Spanberger wanted, which starts at a 6% excise tax and is graduated up to 8% after 2 years. I don't know why they need so much time at this point if they've studied so many other markets, but this is kind of typical of old way of thinking of how these markets, when they add in adult use, for whatever reason, they still like to have this amount of lag time. Not excited about the excise tax. I think, if we've learned anything, that overtaxing is stupid, doesn't generate more. But here we are. So, I just, unfortunately, I feel like this is another scenario where the industry is begged for at any cost to get something done. And this is what happened.
Did I see a $10 million fee there, Morgan, to convert to adult use?
Did that survive into this new form?
I believe, but I am not the last thing from an expert at Virginia, but when I was doing some Google research, that did show up. So don't trust me there, but that's a potential one, which seemed a little rich, you know?
Yeah. Extortion level.
Exactly. You've built this whole thing now to participate in the larger one. We would like $10 million. Thank you very much.
Yeah. Right. And then it begs the question of if adult use even happens and gets rescheduling, or if it doesn't, does that still create as much incentive to pay that fee, pay 280E, pay for all of that to have adult use sales? Is there an ROI there?
Yeah.
That'll be a question. We'll have to see. So yeah, that's kind of the state of there. Georgia.
Just to pause you, because people listen to the show, Morgan, to make money by buying cannabis stocks. In terms of companies to benefit there, tell me if I'm on the right track here. Licenses are GTI, Jushi, probably disproportionately benefits because of their smaller revenue and market cap. Verano, the New Air, which is Mill Street, and what is that, Arboretum? Is that how you say that? And Cannabis, which now, is that also all Mill Street, if I understand correctly? Yeah. So go buy Mill Street. Go buy yourself some Mill Street stock if you like Virginia.
Yeah.
But yeah, so GTI, Jushi, Verano, the New Air entity, and the former Cannabis is what I have written down.
Yeah.
Okay.
Georgia, though, good news. They had started with a very restrictive medical program, limited in THC, limited in form factors, limited in qualifying conditions, major improvements in their medical market. They originally had a 5% THC cap that's been removed. They now replace it with some 12,000 milligrams. New products now permitted to vape. Edibles, gummies are also included. Smoking and burning the plant is still strictly prohibited.
Ooh.
So
how about a dry herbal vaporizer?
I think that would qualify under vape.
Okay.
But that's a good question. Patients 21 or older. Well, I guess that was what that was. Expanded the eligibility where before it was end of stage, severe. Those have been removed. Doctors can recommend treatment earlier in diagnosis. So they've added a bunch of qualifying conditions. I won't go through all that. Here's a cool one: out of state medical cannabis reciprocity. So if you are visiting, you can get a 45-day supply in Georgia. So state issued registration cards will now remain valid for 5 years. Yeah. So that is big.
Lower barrier to getting a card and more form factors I can buy. Does that seem right?
Yep. And then, and to your point before about like the kind of the friction of a medical card, you get a medical card, it's good for 5 years.
Yeah. Well, that all sounds positive. Is True Leaf, Morgan, the only public operator in Georgia right now?
Yeah, I think so.
Yeah. I came up with True Leaf, a company named Botanical Sciences, a company called Fine Fettle. I hope I wrote that down weird because it sounds weird when I say it out loud. And Trivana Wellness was the other one. Any of those private operators ring a bell to you?
Yeah, Fine Fettle. And Botanical Sciences. We met a bunch of the, or not a bunch, but some of the Georgia operators. There's some really good business-minded, patient-minded operators there that are like understanding of building a good business and running a good business, understand the pharmaceutical world and like how, because they have to sell them in pharmacies there. Interestingly, they're okay to be federally regulated pharmacies selling cannabis. I always wondered how that was going to work, but it did, and now they're expanding it further. I mean, obviously, being medical now is being rescheduled is another story. But before all that, a couple of years ago, didn't really know how that was going to work. But were they going to have to pay 280E and all that stuff? And I don't really know whatever ended up happening with all of that. but it seems to be working. And so kudos to them for expanding the program. This is the kind of stuff, as I was mentioning earlier about these medical markets, if they just become more open, easier access, it reduces that dependency on adult use to really add in so much if they just can make it efficient and accessible. Usually as we see these barriers come down too on the eligibility, it's usually a one-way kind of chart. It just keeps getting easier and easier.
Yeah. Well, one thing I've seen, Morgan, and probably super biased perspective, but like generally speaking, when people are concerned about providing access to cannabis, after they do it, they're like, oh, that wasn't really a big deal. I think where we get into trouble, I hate it. You look at this park across the street from my house. I'll be walking on the little hiking trail over there, and there's a little overlook station, and somebody will smoke a pre-roll up there with, oh, like that seems a great idea. Smoke a pre-roll, enjoy the view, no harm there. But God damn it, man, pick up your trash, right? And if the sign says no smoking in public, like don't smoke next to families there's a little playground over there. Like don't be smoking weed by the families over there. Like let's be good stewards of this stuff and be good examples and not be out there, causing problems. What I love about cannabis is you're not, my mom was just a delivery driver from a dispensary for several years. And people are like, dude, your mom's 70. That's crazy. She's going out there and, delivering cannabis to people. And it was just the best. She loved it because everyone was kind and friendly. And it wasn't like booze where people are drunk and rowdy and disrespectful. She did, thousands of deliveries, and I had 2 issues, and both of them were just people saying something rude that I terminated them as patients immediately, but it wasn't really a big deal. But I just had no tolerance for treating my mom poorly. So we canceled those people, but that was over thousands of deliveries. Nothing ever happened. She was never robbed, screamed at, any problems. And so I think like as cannabis people, I'm always trying to be like, let's set the example about how to use this stuff responsibly. So we look at these new markets and like this, Georgia thing, hopefully they have that rollout and they have a little more, a little more breadth to it, a little more depth in the products. And they find out, heck, man, that wasn't, nearly as big a deal as I thought. And then that's a path towards, going towards, adult use. And so I hope it follows that pattern. And I think that's generally how it works with cannabis, as people, maybe it's even more so in these southern states, if I could generalize, maybe there's a little more stigma there. Maybe it isn't used as widely. And so if you're a Georgia stoner out there, let's do the right thing and make this program work and use this as maybe a lift towards adult use.
Yeah. Yep. Well said. And I really do. There was one thing actually in Virginia, they did increase the fine for public consumption. It was like a $25 fine. Now it's a $250 fine. And, there was some concern around the racial implications that could come from that. But I think that the through line, or what you were talking about, I think is really important, is respect your neighbor. Not everyone likes the smell of weed. We all do. We're cool with it. Not everyone's cool with it.
Yeah.
So, if you're going to do it, like, 1, can you do it? And 2, do it respectfully.
Yeah.
So.
Well, Morgan, we even toyed with putting another thing on the agenda, and here we are 1 hour and 26 minutes into the show. So thank God we didn't do that, but we sure should wrap this thing because nobody wants to hear us talk for 90 minutes.
Yes. Yeah. No, this is great. It's fun to do a solo show. It's been a minute. I know we try to do them 1 a quarter, but it feels like it was a bit since you and I just got to talk. So, and I love our guests. But I just enjoy these two.
Yeah, I enjoy it too. With the guests, we kind of each have a piece, but tend to put the spotlight on them. And these ones, it's not that I need a spotlight on me, but it just helps to talk through some of these things. And theme of the show is we like to have conversations in public. We'd like to have privately. So this spared me calling Morgan and talking for 90 minutes about the same issues.
So we'll talk in a little bit.
Yeah, I'll call you later. Well, for sure, I'll probably talk to you before then, but for sure, we're going to talk again next Tuesday. We do 2 higher exchanges a month. We like to space them out and do one every 2 weeks, but with travel schedules, that didn't work out. So we're slamming 2 in a week. So today's Wednesday, June 24th, and next Tuesday on June 30th, we will have the level-headed, very smart, very articulate, very well-researched Chicago native Nick Gastovitz back on the show for episode 100. So I'm really looking forward to that one.
Yeah, for sure. It's been a minute since we've had Nick on, so looking forward to it.
Yeah. Well, cool, Morgan. Good chat. Thank you guys all for listening. As I said, the word chat. Thank you guys for participating in the chat. It's fun to have kind of a live audience there kicking things around with us as well. Thanks everyone that listens on YouTube. If you are on YouTube, go ahead and hit that like and subscribe. Maybe ring that bell. That will give you notifications. YouTube is up huge for us this year, guys. Like overall, we're up 50% in listens. We're flat on podcasts. We're up on socials, and we're up huge on YouTube. Started from a small base, so let's not get carried away. But that channel is really working for us. And honestly, guys, I'm stoked that we've been able to grow the show 50% already this year. So thank you all for listening. We super appreciate it. And also, last thing, guys, thank you to everyone that said hello in Chicago. I live in a weird world where I put myself out there a lot on socials and on this channel, and you don't always know how well it's received. Like sometimes people listen, they don't say anything, they don't like it, they don't tell you anything, and you operate in kind of a vacuum, being like, I'm doing all this stuff. I hope someone cares or listens or likes it, because otherwise that's super uncomfortable. And in Chicago, so many people came up and said, "Oh, hey, Jesse, great to meet you. Love the show." I text Morgan when that happens because he wasn't out there, but I sent Morgan a few texts over a few day period, and so it was really rewarding to be out there. And I just want to say thanks to everyone that said hello, because it's super cool to meet the people that are actually listening to us. So with that, I will sign off, and we'll see you guys again next week on Tuesday at noon. The views expressed in this podcast are provided for.
Hang on.
Whoa. Before I do that, I must say thank you very much to FlowHub for making today's show possible. One thing we talked about in the show and in Chicago is that M&A is heating up, and you need to be beautiful to attract the right dance partner. So start that process by using the best dispensary software out there. Ramp those revenues, get your books in order, make the most of this opportunity at your dispensary. In order to do that, go to flowhub.com and book a demo today. That was bad, Morgan, but I'm going to recover. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research nor recommendation. All investing involves risk, including the loss of principal. We're out of here. See you guys next week.